Hello, everyone. This is Louis Borsalino at ManoverMarket.com, and I thought since the market's slow, I'd do a little educational video about what the S&P 500 is. A lot of people out there don't understand it, and especially don't understand the fact that we trade S&P 500 stock futures. So back in 1982, the Chicago Mercantile Exchange entered into agreement with Standard & Poor's to list a futures contract on the value of their index. Well, how do you get to the value of that index? You take a look at these 500 stocks, and you see you have Apple, Microsoft, Oracle, you've got Home Depot, you've got Exxon. So, all these different sectors. You have financials, information. You take all these 500 stocks, which are usually the 500 largest stocks in the United States. You take Apple's market cap of 600 billion. You take Microsoft's market cap of 371 billion. You take Wells Fargo's market cap of 265 billion, and you add up all these different values. You come up with a sum divided by 500, and the average price of a stock, if this was one stock, would be where the index is right now, approximately 1977 half. So when you're trading ES and you see us trading ES, we are trading a derivative product of all the value of all these stocks. So we're speculating on whether that index 1977 half is going up or going down on the day. So we don't really have to know what's going on with Apple. I don't need to know what's going on with Disney. I don't need to know to go on all these individual stocks. What we're doing is speculating on whether the market's going to go up or down as a whole. And that's how these derivative products are basically been derived and used. So when you talk about the Russell 2000, here's the 2000 stocks that are in the Russell. And when you talk about the NASDAQ, here's the NASDAQ 100, the stocks that are mostly tech stocks. So I thought I'd give this little educational video out there because when you talk about trading stock futures, people think it's so complicated. It's not. What we do is speculate whether this group, these 500 stocks right here, the net value is going to go up or down on the day. Now, there's leverage involved. You have to learn how to trade. You have to learn other things. But I think defining and showing you exactly what trading the S&P 500 is. And you got to remember, the S&P 500, so now from now on, when you hear people say the benchmark is the S&P 500, well, the S&P 500 went up 25% last year. That means the net value of these stocks went up basically 25% as a group, as the whole, of all 500 of these stocks. So when you see people tell you that they beat the S&P 500, they better mean that they earned more than 25% on their money last year. Now, also, the market goes down. So I thought this would be a little clarification video, and I'm going to start putting more things like this out so that we could educate people to the value of trading stock futures. This is Louis Borsalino, ManoverMarket.com. If you have any questions, send them to support@ManoverMarket.com. Okay, market still trading at 1977 half. We're looking for 1979 to 1981. It's 1 o'clock almost Central Standard Time. So looking for the market to pick up and get a little busier here. All right. Good luck. Happy trading and talk to you later. Thank you. Bye.